Will the market go up or down? Should you lock in or float? Find out this and more with Master of the Markets, hosted by Barry Habib of MBS Highway. Brought to you by Paramount Residential Mortgage Group.
Welcome to another edition of Master of the Markets. I'm Barry Habib at MBS Highway, created exclusively for NMP TV, brought to you by our good friends at PRMG, who are working for your best interest. Hey, it could be a rocky road for mortgage-backed securities and interest rates this week because inflation is starting to rear its head. Now, we're going to get a report this week on the Consumer Price Index. That's going to be Tuesday morning. And the thing of it is that if we take a look at last week's numbers, the Producer Price Index, both here and in China, this is wholesale inflation, usually doesn't get a lot of respect, but it did cause some concerns in the market, caused some turbulence because the numbers were very, very hot. All this stimulus and talks from Jerome Powell last week, the Fed chair, pretty much saying he's doubling down. No end in sight to all this stimulus that's coming. So bond market bracing itself, I think, for a little bit higher inflation readings. Now, I've talked to you about this before, but it's really going to get hot over the next 2 months. This CPI reading on a year-over-year basis should move the needle a little, but it's next month's and the month after that's going to have Consumer Price Index go from its current level of 1.3% year over year on the core to probably around 2.5% on the core. And if you think about interest rates right now, yep, some of this is priced in, moving interest rates from about 2 3/4 to 3 1/4 or so. There's some more room to go. Mark my words, come this summer, over the next 2 months, you're going to see interest rates move up rather significantly by probably another 0.5%. So tell your customers that they've got to protect themselves. Now, as you're watching this today, Monday, you're going to wind up this afternoon at 1 p.m. Eastern getting a 10-year note auction. And just think about it. If you knew that the following morning, on Tuesday morning, there's going to be a potentially hotter reading on inflation that's bad for bonds, would you be diving in with both hands? Probably not. A 10-year Treasury, in my opinion, has a chance to get back up all the way up from right around 163 or so up to 175. So that could cause some heartburn for you. So brace yourself, protect your customers. And there's a lot ahead of us here. You know, a lot of people talk about, will this hike in rates, this move up in rates, destroy the housing market? Listen, it's a very big difference. People always compare like 2007, 8, 9, totally different game here. You know, in 2007, loan to values were around 68. It was only about 32% equity. Now it's kind of reversed. Now there's like 68% equity and 32% loans. So there's roughly $11 trillion more in equity in homes. And there are so many other factors. We go through all that and all the stuff that'll help you gain more purchase transactions within MBS Highway. You've got to do it. I mean, please don't get left behind here because it's going to be really hard for you, quite frankly, to go up against the competitor who's using the tools in MBS Highway. They're going to take away your realtors. They're going to take away your business. Get on board. This is no longer a nice thing to have. It's pretty much what you need in this market, especially on the refi side, because you can keep the party going and help people with debt consolidation tools. We're the only ones that have the debt consolidation tools, bid over ask tools that will help you do that. Get on board with MBS Highway. What are you waiting for? Have a great week. Bye-bye.
Be sure to click on the link below for your free 30-day MBS Highway trial.